The Kenyan telecommunications giant Safaricom has been granted a license to launch its M-Pesa service in Ethiopia by the end of the year. That rollout is expected to lift the profile of the service in a country that still remains largely unbanked. The Safaricom-led consortium in Ethiopia has paid $150 million for the license needed to roll out this mobile money service to the National Bank of Ethiopia. Within 7 months of starting operations, Safaricom had 3 million clients in the country. Voice, messaging and data services have been rolled out to 22 cities and regions with over 1,200 network sites, and the company plans to add about 3,000 more in this fiscal year. The company has just over 900 employees in Ethiopia at the moment. Now, at the same time, Safaricom's share price fell fairly sharply after the release of its full-year results this morning. In fact, at one point, the company's shares were down by 6.8% before paring those losses to close about 4% lower on the day. At these levels, Safaricom's market capitalization has effectively been cut in half since the start of the year. When I spoke to the firm's chief financial officer some hours ago, I started by asking him if that decline was accelerated by the markets not having fully priced in the cost of Ethiopia's operations getting started.
The macros have hit everyone. Globally, the challenges on inflation, on the currency, and we are not insulated from there. If you look at our financials, the cost has grown. Now, for Kenya, additional factors were last year's election. We have seen significant business deterioration, business sentiment deterioration, part of Q2, and also part of Q3 till the time the government sets in. So that has an impact. I mean, let's just accept it. But within that, I mean, from starting with Kenya, I think our headline numbers are still very strong given the macroeconomic environment.
Because you had growth pretty much across all business lines.
From a revenue perspective, we have grown pretty much all revenue line items, starting with mobile data double-digit growth. It continued. Fixed grew 20%. High single-digit growth, close to 9% on M-Pesa. Lower than normal trend, but when the return to charging came in Q4, we have seen growth bouncing back to 12.2%. So that's very positive. Voice continues to be under pressure, and that's not a surprise because that's how it has been. SMS, the messaging, surprisingly came back, and we had a positive year-over-year growth in messaging. So given that the consumer wallet is under pressure because of inflation, and then everybody is trying to optimize their spend, and we have been actually providing a lot of values to our customers. Peter did mention in this morning's investor update, we have optimized our mobile data pricing close to 75% in 3 years. We have been optimizing our voice price. Last year alone, we have reduced it by 16%.
And I know there was a question that came up from the floor about moving over the medium term, especially with respect to Kenya. I know mobile termination rates are a bit of an issue because that has a hit. I think the annualized figures are 2 billion, 3 billion shillings for the entire year. But given everything that you're talking about at the moment, on one hand, you're taking a revenue hit with MTR reductions, but you've also reduced call prices, data prices to clients. Do you think that has stabilized now, or should we expect a few more cuts to come?
So that's a good point you raised on the mobile termination that I forgot to mention about that. I think that's also very specific to Kenya. Rate was reduced by about 40% last year, and you would also recall that it's an intermediate rate. The rate would be applicable till 31st of July. So the Communication Authority is expected to come back with a new rate. Either they continue or they revise downwards. I think that's something that we are closely watching. Now, the value to our customers is extremely important. That's what we always do to make sure that we maximize on the specific customer's needs, what they need and what we are able to provide to them. And that's how the pricing comes into play. Now, how are you trying to manage it through what we call, I think Peter also presented about the productivity initiative. What it does is you're trying to look at every single waste, trying to see something which is more sustainable, and we managed to, at an inflation level of 8-9%, we still managed to keep our operating cost growth to about 7%.